Jeremy, if you're right and we're on the cusp of the bursting of an epic bubble, is now the time to, as they say, sell everything?
I suspect selling everything would work out just fine. However, having said that, there are major discrepancies, as there were in 2000, between the US tech, which is overpriced the same as it was in 2000, and everything else. So the value stocks, the low growth stocks, if you prefer it, are about as cheap relative to the high growth stocks as they ever get. So they will not have the same pain, but they're still at risk to some degree, I suspect. The good news is that overseas, they have not had this same huge bull market and the same overpricing that we have had. And that of course, is a heaven-sent opportunity, because you can go out into the emerging markets and they are absolutely not that expensive, despite the ridiculous argument of comparisons with a overpriced bond market. They're simply not that bad anyway. And compared to the S&P, they're as cheap as they have ever been about. They've been this cheap 2 or 3 times, and each time it's worked out very well. So you can buy emerging markets, and you can look at the intersection of those two ideas, which is the low growth stocks or the value stocks within emerging, and they are handsomely priced. You should be able to make a really decent 10, 20-year return there. You will not make a handsome 10 or 20-year return from US growth stocks. There is, in the end, a simple arithmetic. The higher you bid up the price of an asset, the lower the long-term return you will get. There is nothing you can do to change that equation. Every day the market goes higher, you know only one thing with certainty, that the long-term return will be less than it was the day before. I have no confidence, and have not had any for over 20 years, in price to book and PE and price to cash flow, price to sales even, as a measure of true value. A measure of true value is the long-term discounted value of a future stream of dividends. A growth stock is of course worth a higher ratio of this, that, and the other than a low growth stock. But that doesn't mean they can't be overpriced. So value should be cheap for what you are. You should build in the growth, you should build in the quality, and if it's overpriced, it's overpriced. But to use a simple-minded measure of book is a crazy idea. A cheap book is the market's vote on the worst assets out there in the marketplace. The lowest PE is the market's vote on the worst earnings, most likely to be overstated or downgraded. And the same with yield. It's the market's vote of the most likely to be cut. These have no business being a good indicator of future performance. I'm also worried, by the way, about inflation. If you think you live in a world where output doesn't matter and you can just create paper, sooner or later you're going to do the impossible, and that is bring back inflation, that we haven't seen for 20 years. And you keep it up on a global basis, you will have inflation. And I can't help but notice that around the world, the commodity prices of all kinds really, but particularly critical food and critical metals are going up. And if you have that happening, and you have a rapidly declining growth rate in the workforce towards zero and negative, you are really set up for this time is different. So we are not just in a bubble market, but we're looking at a global economy that is at an inflection point to turn down in long-term growth rate. I also think shares that benefit from the greening of the economy will do much better than the rest. Anything to do with renewable energy, the electrification of the system, electric cars, etc. These are all going to have top-line revenues that dwarf the declining growth rate of the rest of the global economy. It will take trillions of dollars to decarbonize the global system. It will dominate everyone's portfolio. And if you have to own US stocks, they're the ones to own. And look around for a good climate change fund. I'm happy to say GMO has one. And they're doing very well now that the focus is clearly, finally, took 20 years to wake up, but in the last year, people really are beginning to understand the size of the problem and the need to move money into greening the economy. What is the future value of the dividend stream of Bitcoin? I can tell you that doesn't take a prize-winning mathematician. It is nil. It will never pay you a dividend. If you're desperate, can you eat it? No, you can't. Its entire value is on the greater fool, is it not? So Bitcoin could be worth $1 million a unit if you can find someone to pay it. So
couldn't we say the same about gold? Doesn't generate any dividend stream.
There are two things.
Can't eat it either.
Yeah, that should give you a measure of restraint in your enthusiasm for gold, granted. But gold has had the odd 12,000 year test, which it has passed pretty well. And Bitcoin has got a few years to go yet to catch up. And secondly, gold does have some fallback qualities. It doesn't tarnish. It's unique in that sense. Everything that was ever made of gold is still around. And that's a pretty handy characteristic that Bitcoin also lacks. So I would say, yes, I'm nervous about gold because I can't eat it and because it pays no dividend, but it has two wicked advantages over Bitcoin. Bitcoin is 100% faith. And come the next market phase where faith is at a minimum, what do we think will happen to a stock whose entire reason for existence is faith and nothing but faith?